Hello, hi everyone. Thank you. Okay, so now we will start. So those who has joined first time, just to introduce myself, and I will just continue on the module 8 on scope 3 emission. So I'm Jay Shah. I'm based in UK, and I worked across various sectors, including the maritime asset management, geos, and public sector. And I worked on climate risk assessment, scenario analysis, various ESG reporting through the various standards of CSRD, TCFD, SSD, SFDR, GRI, EU taxonomy, and other parts of ESG reporting as well as the climate reporting. Also, I worked with government projects where city climate action plan or to analyze the various types of data and advise to the various corporate companies, to the senior management and board members. And I contributed to the various types of certifications and frameworks where it's required to do a sustainability analysis and other stuff. So this is just a brief about my background, and I will jump on the module 8 on scope 3 value chain emissions. Before that, I wanted to just introduce what we are into this at particular moment. And today's modules not fits in one standard alone class. It's a bigger picture. So I have developed end-to-end ESG and climate reporting series that covers 39 modules across 6 phases. So covering everything from foundations all the way through the implementation of ESG reporting roadmap. So just to quickly show you what kind of module is in 30 seconds. So phase one, foundations, that covers understanding of the global ESG reporting landscape for core sustainability reporting work, as well as uh, understanding of the various types of modules that covers various types of standards, mostly covers from the EU as well as the ISSB. ISSB is across the various jurisdictions and needs to be report all the listed companies on the various countries and jurisdictions. So we covered already, and module 1 to 6 is already live. If you still not getting the links or anything, that I will share in the chat right now, and you can also get these things after this whole sessions if you have registered through your email ID. So we will send you the all the module 1 to 6, and that is for the exclusively for all the subscribers and followers only. Module 2, that is technical methodology. Module 7, we already covered last live session, and that is part of the GHG emissions that is available in YouTube in public domain. Module 1 to 6 is not available in public domain, but we will send you whoever participants has registered and joined this today's session. So we will send them for the module 7 link. Module 8, that we are going to see what kind of scope 3 value chain emission is going to be done. And then module 9 is also there. We will send the link at the end of the session so that you can register on that site. So these are the covers. Phase 2 is covers the technical methodology, and today's module is part of the technical methodology, that is module 8. For phase 3, that is covers the topical ESRS standards under the CSRD. So here we are going to deep dive into the ESRS E1, E2, E3, E4, E5, and social standards and governance standards. For phase 4, that covers the sector specific applications. So we then apply everything to real industries, whether it's energy, manufacturing, finance, tech, retail, real estate, logistic, agriculture, healthcare, mining. And we are going to show that how ESG work differently across the various sector. And phase 5, that is a very advanced level, advanced implementations that covers some modules from 31 to 36. So scope 3 supplier engagement, few of the stuff that we are going to see today. Then ESG data integrations into the financial systems, various assurance and digital reporting, what are the gap analysis and governance structures. And the final phase 6 that covers two modules. So we are bring together all the stuff, building your ESG reporting end to end, and best practices or and case studies, including the implementation strategy. So the idea is very simple. We are going to move from frameworks, calculations, disclosures, sector use cases, their implementations, and the overall roadmap for the ESG and climate reporting work that covers a whole series that designed to bridge the gap between the regulatory and theoretical and practical implementations part. So my focus throughout this whole program is not just on explaining the particular standards, but on showing you how to actually apply them in real corporate settings. So using these tools, calculation logic, and audit ready methodology, it will be helpful for you in your professional life or in your learning journey, that how it's actually implemented in corporate company. So today's sessions on GHG emission is the technical foundation for the everything that follows. So we are going to see the scope 3 that helps to develop a climate target, transitions plan, ESRS E1, scope 3 emissions analysis, and net zero strategy as well, because it's a very much foundational analysis and very much complicated analysis, I would say, that you need to understand. So currently, we already covered the phase 1. We are at module 8 right now. With live sessions. So if you have still not received any particular link, I'm going to share in the chat box in just a few minutes, and you can get access from that particular link. And still, if you are not able to access that particular link, we are going to share all the module link in your inbox if you have participated or registered through the topmet. So I will send you through the all the links. Few of the participant has also joined in module 7, so definitely they do have the all the stuff, so you can access from the requirements. Okay. So yeah, I will share the links in few minutes. So we can also continue that. Also, before we continue, you can join all the groups that I have shared in the email. And if you have not received any email, then you can join here. I just pinned this particular comment if you want. So you can just join that particular group so that you can. This where I will upload all the Excel calculations, practice sheets, updates, and our upcoming modules. Few of the participants is already in the group right now, so they might get all the updates whatever that I'm going to send into the mail as well. So if you don't want to miss any templates or future session updates, follow on this Instagram group and join the ESG and climate analysis group today. I will share all the updates so that reminders and new module announcement can be there. So yeah, so now I'm sharing the link for the module 1. This is module 1, this 2 module link. You can just save your stuff in your notebook or iPad or any notes that you are using right now. Also module 3, which is covers the IFRS S1 general requirements. That is very basic stuff that you need to understand. Module 4 that covers IFRS S2 under the ISSB standard, that also part of the non-financial climate reporting work. Module 5 that covers CSRD and ESRS architecture, that how CSRD and ESRS work together, and what are the eligibility criteria for all the companies and other stuff. Module 6.1, since module 6 is very much important, so I divided into two parts. So that covers differently for ESRS 1 and ESRS 2, that covers the general standard and mandatory standards. So that helps you to understand and practical yourself to begin your end-to-end ESG reporting series. So module 1 to module 6 I already shared. Module 7 is already uh, publicly available. You can watch through this link, and all the stuffs that are available on the YouTube only. So, but all the modules are going to be unlisted, and only the subscriber and followers can see those kind of links, and who has joined the whole community. So you can access the end-to-end ESG reporting series freely. I will also explain the different stuff that are going to help you for your climate scenario analysis and other stuff in chain emission. Detailed presentations, I will just brief you out all the categories from GHG protocol standard methodology. Also, we will going to try to help you to calculate the all stuff, and also the different assessment class, as I mentioned, that few of the modules are already going live to the in a different segment. So if you are interested in particular analysis, stay tuned. I will just share in last a few minutes. So let's start for the scope 3 for technical calculations for the each and every scope 3. So for the scope 3 calculations, it is very much useful to understand the GHG protocol guidance. So that guidance is almost 200 pages, and it's a very much typical language. So I try to convert into the presentation, and I will explain each and every category to understand lots of categories and how it's work for the various scenario part for each category. So I will also share this document, whoever is new for the GHG emissions accounting professional. So you can also get access on that site, and you can read if you want. Otherwise, this presentation is okay for you to understand the final scenario of scope 3 emission. So let's start on the scope 3. So the value chain framework that we need to understand first. So for the value chain is how all the products and service is started. So this diagram shows you the full emission landscape that scope 1 and scope 2, as you already know, and few of the participants already joined last module. So scope 1 covers the direct emissions from owned assets, and scope 2 that includes purchase electricity, steam, heating, and cooling. Now scope 3, it's a very broader that not covered in scope 1 and scope 2. So scope 3 is everything else, and upstream and downstream, including starting from the purchase of the goods, logistics, product use, and further product use, and your investments. So from a business perspective, scope 3 is very much critical because it reveals supply chain hotspots, regulatory exposures, and cost reduction opportunities. So for most of the organizations, over 70 to 90% of your total emissions sits under the scope 3 emission. So scope 3 is very much critical and required to calculate very carefully, so that you can report your scope 3 emissions in your ESG report or your non-financial report, so that you can get a more branding, more marketing, or more loans or investments and lending for your products and for your services. So next, we are going to understand the accounting principles and boundaries, boundaries. So you either use control approach, that is accounting for 100% emissions from control operations, or any kind of other uses. And the second one is the equity share approach, so that based on the ownership percentage. So that is very much helpful to understand your principles and the boundaries. And the next is the data hierarchy. So at the top of is primary data, definitely the supplier specific measurement. So if you get the raw data, that is wonderful. If unavailable or not getting any kind of particular primary data, we fall back to secondary data. So that can be the industry average, or energy efficiency impact impact assessment module, or the emissions factors. So those are the different types of EEIO models that you can helpful for to understand that energy efficiency intensity models. So that can be anything. So here also, not you have to understand that biogenic CO2 must be reported separately from the fossil emissions. So same things I have also mentioned in the scope 1 and scope 2, that if you are using any kind of other sustainable material like biofuels, methanol, ethanol, or other kind of sustainable materials in any scope, you have to report separately, because it's emissions that generated from the sustainable materials or from the biofuel. So those kind of stuff that you have to understand your category, and that helps you to create your accounting principles and accounting data. Next, we are moving into the category. So let's start with the category first, which is a purchase goods and services. So here you have to understand all the category very carefully. It is very much easy to understand. Purchase goods and services for your products, for your services, part of the scope 3 emission. So if you are using any kind of product, whether it's a furniture, machineries, or any transportations or goods and services that purchased in your reporting year, that helps to any kind of services, that purchase goods and service emissions you have to calculate. So here the real game is the extraction, production, and transportations of any kind of purchase goods. Those emissions you have to calculate for your products and services. So for example, you have the two diesel vehicles or two petrol vehicles that owned by your company, and you are using the petrol or diesels or any kind of other fossil fuel in your car. So you have to calculate the purchase petrol emission that you used, or any kind of gas that you have used, or any kind of diesel that you have used. So from extractions, productions, and transportations, all the emissions you have to consider in your reporting work for the scope 3 category 1 emission. So that is called as a boundary, that cradle to gate. It means uh, from where the diesel has been extracted, produced, and transported. From starting raw material extractions to the gate of reporting company, it means to your product, you have to calculate each and every step. So for the category 1, this is usually the largest upstream category for the most of the companies. So that includes emissions, as I mentioned, from extracting raw materials, manufacturing products, and transporting them up to your supplier kit. So anything you buy, that I mentioned about the various gas and the fossil fuel products, but if you buy the steel, chemicals, IT equipments, professional service even, that sits into this under particular category. So this is a primary calculations approach that can be done through the quantity emission factor, or you can also calculate through the spend based emissions factor. So in the quantity, here the calculation logic in yellow part, you can see the formula. So the mass or unit of goods you have to mention, or you have to calculate. So the primary calculation approach is to calculate is quantity based or the spend based. Quantity means how much quantity can be in mass, units, or any particular volume. So that quantity you need to understand, or you need to report for the quantity raw data. For the spend based calculations, if you know that you purchased your product in particular x amount, then that is based on the financial spend that into going into the emission using economic input, and you are getting the output into the emissions. So that is two methods, definitely spend based and the overall factor. You have to multiply that by a particular emissions factor into the thousands, and you get your tons of CO2 equivalent emissions for the category 1. If you have the quantity data, which is very common because some suppliers are not giving the particular data, so we have to use the spend based approach. So EEIO factors are available that convert financial spend into the emissions using, like outputs, and output models can be the span based data. So your raw data usually comes from the procurement system, like invoices, bills and materials, supplier ESG disclosures, everything. So the best practice is always supplier specific data first. So if your supplier is providing the data, including the quantity and other mass balance and other volume, it will be definitely good. But if not, then you can calculate through the industry average second, and then you can utilize the spend based methodology that only as a last resort. So this category is very critical because it often drives supplier engagement and scope 3 reduction strategy when you category 1 to 15. Before we are going to the Excel analysis, during that time, I'm going to take a questions. So you can take your, you can mention your questions in the chat box. So you can ask during that time. So for capital category two, that is capital goods, which is also again it's a very important category. So for example, machineries, buildings, vehicles, large IT infrastructures. Calculation is very much important to understand the number of units, then cradle to gate emissions factor. I hope you understand the cradle to gate emissions factor. So cradle to gate emissions factor, I will just explain once more that those factors, those emissions factors, which help you to calculate that products coming from extractions to your gate, not utilized yet, but to your gate, and then you are going to utilize for other purpose or other reason. That emissions factor will be different. So cradle to gate, it is also often called to well to tank, that is WTT. So that is also called in life cycle emissions is cradle to gate. So those emissions factors, so if you buy 5 excavators of JCB or any kind of other machinery, I'm giving you example, so you have to multiply it by the manufacturing footprint of one of the excavator. So if those units or emissions factors or footprint data is not available, then similarly you can utilize the spend based methodology. You can see the formula in the yellow part, that capital spend into the EEIO factor, which is energy efficiency impact factors for the emissions factors from the manufacturing point of view. So those important accounting rule here is to record 100% of your emissions in your financial year of purchase, and you do not amortize over the asset lifetime. So every year you have to calculate that category 2, and this aligns with the GHG protocol and avoids the double counting across the years, so that you can mention the typical data sources through your asset registers or capex reports or engineering specifications in your report. So this category matters more relevant to the construction, mining, infrastructure, and manufacturing company, so that those categories are fall into the capital goods. Category 3, we will move into the next category. For the category 3, which is a fuel energy related to data, is different than this category 3 of fuels and electricity that already reported in scope 1 and scope 2. So, uh, as I mentioned in category 1, one of the example of diesel and petrol, similarly, this diesel and petrol data will covers under this category, that fuel and energy related data, that from where you are using the fuel and the energy. So think of it as a hidden carbon behind your energy use or any fossil fuel use. So the formula is very simple, that fuel or electricity consumed uh, multiplications by the upstream emission factor. I am not saying that the existing product or service you are utilized your fuel or energy, but it is a upstream, that extracting of fuels or electricity from the first point to your gate. So this includes extraction of coal, gas, oil, that all the stuff, and then processing, and then transmissions and distributions loss of energy, electricity. So if you consume electricity, category 3, that accounts for emissions from mining the coal or extracting the gas or extracting the diesel and used to generate that power. So those data comes directly from your scope 1 and 2 energy records, because you already have those kind of scope 1 and scope 2 energy related data or the fossil fuel related data. But here the emissions factor will be different, which is upstream emissions factor. So this category becomes important when electricity grids are fossil heavy. For example, coal-based power plant. So energy that's come from the coal-based power plant, in that situations, this category 3 will have the more tons of CO2 equivalent or the more emissions, because your electricity comes from the coal-based power plant. If your electricity coming from the renewable energy, then definitely this category will not be part of the emissions. And similarly, scope 1 and scope 2 is also going to be reduced. So this scope 3, which is fuel and energy related activities, that covers under the category 3. Let's move into the scope 3 category. So this covers various types of upstream transportations and distribution. You can mention few of the stuff in chat box, and you can give the emojis if you are with me, and if you have any kind of confusion, you can just write down in the chat box, and also you can comment whatever that you want, so that we will see all the stuff during the question answer. Category 4, that is part of the upstream and upstream related transportation and distribution. So that covers very uniquely for third party logistic. Before, so the primary formula is the very much similar, that mass into distance into the more specific emission factor. So for example, 20 tons shipped through the 5 kilometer by truck or by any kind of heavy mode of vehicle, then if logistic partners have those data, definitely this comes multiplications through the emissions factor. If not, then you have to maintain your fuel data, and what kind of procurement logistic partner has used the fuel. So if you have that whole fuel data, that will be helpful, so that you can mention the directly fuel consumed into the combustion factor. So typically those sources covers from the bills of lending and freight invoices or shipping routes, and other invoices that helps to do lots of fuel that consumed by the whole end-to-end logistic supply. So the key challenge here is fragmented logistic data available through the various suppliers. So you might not get the exact fuel consumed by the whole logistic when you are using any kind of upstream transportation and distribution product that logistic by third party. So in that case, you can calculate through the mass, distance, and mode of specific emissions factor, and based on that you can calculate the category 4, that is part of the upstream transportation and distribution. So most of the companies start with the average, that is the very easy to do, and based on the transportation mode, whether it's through the flight, ships, or truck, and based on that you can calculate the average category 4 emission data for the scope 3. Then for the category 5, which is a very important category, 5, and that is include the disposal and treatment of operational waste. So here waste management related a lot, because they do have the lots of data to calculate those kind of stuff. If you don't have the waste management team, then you can also calculate the waste generated in operations, that how much of emission has been generated under this category. So the formula is again very simple: mass of the waste, which will be the weight of your waste, and the treatment emission factor. So whether this treatment has been done through the incinerations or recycling plant, or it's directly dumped into the landfill, or how it's worked to other part of things. So that each treatment has a different factor, whether it's a landfill, recycling, or incinerations, or anything kind of other treatment policy or treatment methodology. So, for example, 1 ton of recycled paper is very different from 1 ton of hazardous waste that's sent to the landfill site. So, if you are recycling any kind of material, for that emission factor will be different, and overall emission is also going to be reduced, because it's not harmful for the environment, because it's recycled already. But if you are rather than the incinerations or the recycling. So that is why it is very important to recycle your waste at your home or at your site or at your particular manufacturing sites. So it that helps you to reduce the category 5 things. So here the data source, as I mentioned, the waste management team, if you have, then it will be good. Otherwise, you can ask for the health and safety team. If not, then waste halls who are managing all the waste for you, you can ask for that, or you can also develop your facility records. Also the contractor invoices, if you assign any kind of contractor for handling all the hazardous waste or any other product waste or e-waste, you can ask those kind of contractor invoice so that you can get all the waste that collected by them. So this category support overall waste reductions for the circular economy initiative. So for that, this emission is very helpful, and overall scope 3 reductions emission is also very helpful. Again, we will move into the category 6. This flight vary by class. It can be the economy versus business. It can be the short halt versus long hold. So those kind of stuff is very much depends. So for that, uh, if you know the distance, if you know the mode, then you can multiplications by each other along with the emissions factor. So the formula is very simple: is distance multiplications by the mode emissions factor. If distance is not available, then you can definitely go through the spend based methodology, which is spend into the EIO factor, which can you can get from the UK DEFRA or the EPA US, or any kind of regional emissions factor. So for that, raw data usually comes from the travel agencies, expense platforms, booking systems. This category is very much often an early reduction target due to the remote work. So those kind of category you have to calculate very easily and easy to publicly available through the various types of business travels, and you can easy to disclose in your ESG report. Then let's move into the category 7. So here it's employee commuting. Again, it's a very much easy, similar kind of category for the business travel, and also part of emissions from staff traveling between the home and the work. So here the formula is very simple. Employees into mod share, multiplications by the average distance, one way, two way, multiplications by their working days, that how much work they have done during the whole financial year out of 365 days, and multiplications by the emissions factor. So those data typically comes from the employee surveys or the HR postcode analysis or any kind of analysis that human resource team has been done, that who is utilizing which type of mode, or employee community survey, or how it's work. So you can also include this remote work savings as well under this category, because that particular category is who is doing the remote work. Those energy consumptions will be comes under the different category. So this category highlights workforce mobility patterns, that how they are coming to the work or how they are commuting to the work and doing their work. So for that, we have to calculate the employee commuting emissions under the category 7. Next category, that is right now category 1 to 8, is all the upstream. And category 8, that is upstream leased assets, which is assets that you lease but you are not utilized operationally, or you are not you don't have the operationally control. So for example, rented office or big IT infrastructures that rented by the big IT companies of TCS, Infosys, or any kind of Accenture, any kind of company, similarly for the L&T and Linde and other stuff. So those examples are rented office, which is a lease asset for 90 years, 80 years, or 30 years. Those are the rented office, or some of that manufacturer has utilized or leased for the warehouses for their manufacturing processing unit. So those examples or those assets comes under the upstream leased asset, that you rented the particular warehouse or offices. So the formula is very simple, that floor area or the energy use that you have done for all the big office spaces that you already have leased or the rented, or any kind of warehouse, into the multiplications by the emission factor. So fallback is spend based stuff. Similarly, I saw the same methodology for the other category. You can also use a different span based stuff, but in category 8 it will be difficult because the span base is giving a different emissions factor for the upstream lease asset. So I will suggest to go from the floor area into energy, or the energy use multiplications by the emissions factor. So those data, raw data, you can get through the utility bills or the lease agreements that provides you the basic inputs for your floor area or the energy use. And multiplications factors like emissions factors you can utilize through the UK DEFRA or US EPA or your respective country based emissions factor if they have already published. So that is part of the category 8. So up to category 8 is we have covered uh, all the category that part of the upstream. Category 9 to 15 is part of the uh, downstream. We will have 5 minutes question and answer related stuff. So if you have any question for the upstream category, just mention in the chat box. I will just read and I will try to answer that all the question. So yeah, I can see a few of the stuff in Zoom, in Google. So so I can read loudly so that the participant can also understand the question. So let's I have purchased one capital good like reactor for my plant whose life is 25-year operational life, then GHG emissions will report every year or one time GHG emissions. So that is definitely you have to report every year unless and until if you have the EPDs or the LCA related disclosure of your product or your reactor or whatever products that you are using, that tracker or reactor. I'm not sure what is the pronunciations for that for your plant, but you can utilize that LCA and the EPDs if you do have the whole life cycle product emissions. If you don't have that particular product, then you have to ask your procurement that if your product's capital good life is 25 years, then you have to collect all the data and you can calculate for the 25 years in at one time and you can disclose that whole stuff. But you have to tactically strategic full make sure you are smart enough that whether you are required to report your whole 25-year operational life GHG emission under this category of capital goods or not. That is first. If that helps you for your investors or they are asking anything, then it will be helpful. Uh, Morally and ethically, definitely it helps if they do have the LCA and the EPDs. If they don't have, then you have to calculate for each and every year and you can disclose for each and every year. So clearly, in short answer, 100% of those embodied emissions, which is called as embodied, are recorded in the acquisition year. So whenever you are purchasing any kind of goods, so these emissions happens before the asset is delivered to you. So during extraction of material, production and assembly, so those all stuff that you have to calculate for your manufacturing emissions, it depends on what years that you are going to report. So you have to calculate for once. You do not spread or amortize them for over 25 years. You can calculate one time and you can disclose into your ESG report or your investors for 25-year operational life. And this keeps scope 3 aligned very well for your financial capex reporting or avoid artificial any kind of artificial error. So those kind of stuff, it's very important to understand for the category 2 for the capital goods. So thank you for this question again. Yeah. So, whom will report GHG emission? I hope, Sunil, I have answered your question. So you can, for Vartika, which are the emissions factor database where we can use for the scope 3 emissions factor. So, Vartika, to answer your question, you can utilize the UK DEFRA emissions factor that helps you to understand the emissions factor that utilize for the all types of scope 3 emissions. Also, the US EPA that developed that scope 3 related data. UK DEFRA is one of the good examples. Similarly, Swiss, Dutch, emissions factor for the Europe level stuff. Each and every country publish the emissions factor. It depends on your locations. It depends on your suppliers and procurement, from where your product is coming from, and from where you are going to use that particular product. So it's up to you and your company that which emissions factor that you are going to use for your product. So there are so many of database available based on the jurisdictions and the country wise. You can utilize those all the emissions factor. Okay, so now I not seen any kind of other questions. If if you have any question, just make sure that you type in the chat box, and I will try to answer. Yeah, there is the one question in the Zoom. For the category 8, upstream lease asset that covers warehouses, manufacturing, that also covered under the category 2. So here you have to understand that if you are using your warehouse for your manufacturing process, that warehouse, that were leased asset area, that you have to consider under your category 8. So if you, and for the capital goods and category 1, that will be separate. So if you purchase any kind of capital goods or machinery or any kind of other stuff, then it will be considered as a category 2, that Sunil asked the same giving the same example, that reactor using for their plant. So those kind of stuff, that kind of capital goods where you spend your capital to use those kind of products, that covers under the capital goods. Okay, let's continue on the category 9 for the downstream side. For the downstream, so we have seen category 1 to 8, which is upstream category, and which is helpful for you to understand stuff that are going to downstream, which means whenever you are selling your product or selling your service, then this category 9 to 15 will be started. So category 1 to 15 is before the scope 1 and 2 generated, and category 9 to 15 is after the scope 1 and 2 generated. So category 9 downstream transportations is very much similar to that this is transport of sold products when customers pay for the shipping. So for example, if you have a company and order on the Amazon on a bulk side, that all the downstream transportation done by the Amazon, the mass shipping into the emissions factor, and that gives you the overall downstream transportation emissions. And the source can be the retail and FMCG. The overall affecting companies are retail and FMCG companies. Those companies are also utilized the estimate average that customer geography as well. So they have lots of emissions factors when they have to do a downstream transportation. So if you are into those company which is doing the logistics supply, or they are just doing one end to another and transportations, then this emissions is part of that particular category. So downstream transportations for any kind of small products is also considered under this category. Then we will move into the category 10, which is processing of the sold product. So this applies when you sell or uh, any kind of crosso or any kind of stuff. So you have to sell flour to the bakeries. So for bakeries, the processing of the sold products category, they have to consider the flour emission. So they have to calculate the flour emissions for the processing of the sold products. So formula can be the mass unit that has been sold to the bakeries for the flour, and multiplication by the processing emission factor under the category 10. So for each and every category, lots of data is available for the emissions factor. I will share the emissions factors after this sessions to into your email box. You can utilize those emissions factor. Also, we will see the hypothetical emissions factor and few of the UK DEFRA emissions factor during our Excel analysis. So keep stay tuned on that side. So category 10, processing of sold products, and that applies for the intermediate goods to the particular downstream process. Category 11, that is use of sold product category, I think in globally for each and every corporate company. So those companies who are selling or using or processing use of the sold products like vehicles, appliances, electronics. So those who are doing a business of scrapping. So if you are using or if you have the business of use of sold products, or if you have any kind of considerations in your end-to-end product life cycle, then you have to consider it the category 11, which is a very far uh, category that generate the scope 3 category globally. So I will give another example, real example, that for example, Mercedes Benz or Jaguar Land Rover or any kind of uh, uh, car company selling their car not directly to the customer, because they are the manufacturer, they are the original equipment manufacturer, so they are the OEM. They are selling the cars to the promoting partners or the broker or the automobile car dealership owners and other stuff, and then they are selling to the end customers. So use of sold products and use of various kind of other stuff that lies under those franchisees, those automobile dealers, brokers or any kind of dealerships. They have to calculate the category 11, because end customers are going to use those sold products. So that category is globally very much higher level in terms of overall global emissions. So the formula is very much similar, which is units sold, multiplications by the lifetime of that particular appliances, multiplications by annual energy used by that particular whole product, and multiplication by the emission factor. So you model how customers use your products over their lifespan. So as a franchisee, as a automobile dealers, they are going to model that this Jaguar Land Rover car or the Mercedes car uh, generate this much kind of this much tons of CO2 equivalent emissions over their lifespan, for example 10-15 years, if they are selling the car, or maybe 20 years. So those emissions lies under those automobile industry or the automobile franchisee car dealerships, and they have to report in their whole ESG report that they have sold this product, and this product is utilizing by the end customers, and end customers is going to generate this much of emissions that are part of our revenue. So this category drives product redesign and efficiency strategy as well, because if they are selling electric vehicles compared to the diesel and petrol cars, then these emissions will be definitely reduced. So those franchisees, those products, those suppliers, those automobile dealers will sell electric vehicle or the energy based vehicle rather than the diesel and petrol, because they are going to be a much carbon tax if they are selling more products based on their emissions in the developed country, if they have a jurisdiction's requirement to pay the carbon tax. So those categories part of the use of sold product. Category 12, which is end-to and life treatment. So that covers estimate emissions from disposal of sold products, percentage multiplication by the treatment factor, because which treatment that you are going to use to end of that particular life. So that requires various assumptions on recycling rates and material compositions and the treatment type and other stuff. So that covers the category 12 and of life treatment. Let's move into the category 13, which is a downstream lease assets. We saw the upstream assets, and these are the assets you own but others operate. So lots of asset managers or lots of financial services own the assets but operates by the other people. So asset managers like Prudential or any kind of Lloyd's or any kind of asset managers, big asset managers invested into the real assets like any manufacturing units or any societies or any real estate society that you own but that will be used by the other people. So the again formula is very simple: floor area or the asset usage into the multiplications by the emissions factor. So that is very much easy to do for the downstream lease asset. Category 14 and 15 is one of my favorite because that covers the finance related stuff and can see these examples. So franchises here act if you are doing or you are taking a franchisee to sell the car of Jaguar Land Rover or Mercedes, then you are as a franchisors, and franchisors you have to count on that side. So as a OEM partner, Jaguar Land Rover is going to calculate their emissions under the category 14, as well as if any automobile car dealer have a big name like G1 or Inchcape or those kind of automobile car dealer, they are also giving a franchisee to the local level car dealer. So those also going to calculate under the category 14. So those franchisee count, average energy use, and the emissions factors for the franchisee is going to be multiplications by each and every stuff, and you can get the category 14. So usually this based on the representative samples, that how you representative the particular franchisee, or how much franchisee that you give the particular financial year. So category 15, again, it's investment. So this part covers the financial services. So if you are into the big asset management company and you are saying that you how it's work for you for any kind of investment in kind of finance emission. So uh, you are work in Invesco or HDFC or Kotak or any kind of asset management company or financial service or any kind of banks or Lloyds or any kind of other banks, then you are giving to loan to the various manufacturing units, various corporate companies, various governments. Then you have to see that where your money go into. So under the category 15, banks and asset managers are going to monitor where their loan is going to into. So whether it's coal based power plant, then definitely your finance emission is going to be higher. So they are going to give a loan to the windmill company or solar based company who are providing renewable energy rather than to the coal based power plant company. So this represent the finance emissions. So the regulations are already there in UK, EU, and US, as well as other part of regions country. Still lots of countries and jurisdictions are taking initiatives for those kind of finance emissions, so that all the banks, all the asset manager, all the finance is going to the in a sustainable manner, so that all the sustainable business can be happen and overall emissions can be reduced. So again here the formula is very much typical, is invested value. So, for example, Lloyd's invested 30 billion pound to a particular company. So that is invested value divided by the company value. So it depends based on the market size, based on the revenue size, what is the company value, including all the net worth that they have, multiplication by the investee emissions. So for investee emissions, you have to see that what are the products or services they are doing for the whole value chain. So investee emissions, you require the all the total for calculating your category 15 finance emission, and based on that you can calculate the overall category 15 analysis. So this is essential for banks and asset managers, and you have to follow the PKF methodology so that you can calculate very easily. We try to categorize this category 15 in very much easy way so that you can understand better. But category 15 is very typical for the banks and asset managers. Mostly category 15 is not part of the all the corporate companies and more small medium scale company, because it's part of the banks and asset managers. They have to calculate because category 15 is the largest emissions category for those banks and asset managers. So we have seen the category 8, 1 to 15 already, and we will see the one small case study very quickly, that Ecoviges Inc., which is a company who is doing services for the various types of electronics items. So this example shows basically end-to-end inventory. So despite the modest scope 1 and 2 emissions, the total scope 3 is also going to be helpful. So this particular Ecovig is selling the electronics items to the various types of customers, end-to-end customers, and they have generated scope 1 and 2 emissions. Also, they have calculated the various categories that you can see here: category 1, category 4, category 11, category 12, and you can see the scope 3. So they decided in first year that they are going to calculate the category 1, category 4, 11, and 12. So it is there is a no compulsion from any kind of regulators that you have to calculate all the category 15, because it's not material risk for your company or products. So here you can see that scope 1 and 2, and under the scope 3 is 96% of the impact is scope 3, and all the major things is driven by the category 11. So use of the sold product, because use those electronics items and they have to consider those emissions throughout their lifespan. So that covers under the Ecoviges case thing, and 96% of impacts that comes from the category 11, and scope 3 dominates across the scope 1 and scope 2. So that is why scope 3 is calculation is very important. Unless and until your ESG report is not going to be stand out. And the finally, the reporting target and assurance. So finally, the result must be reported by category with clear methodology and exclusion if you are not reporting any kind of category, or if you are not taking any assumptions, or if you are taking assumptions for spend based methodology, then you have to mention in your report. That targets typically focus on hotspot category, like category 1, category 11, those kind of stuff, which is very mandatory, as I saw in Ecovige's case study as well. And the assurance part is very much important, because assurance progress from limited to reasonable. So here the limited, it means nothing came to the our attention. To the reasonable, it means material correct. So that is depending on the maturity of your report and maturity of your company, that how mature your progress is. So limited, it means you have limited assurance, and you have just calculate the emissions, and you have just uh, assure the GHG emission inventory, not other part of other raw data. Reasonable, it means materiality correct, depending on the particular material risk. So here the all the example follow the GHG protocol corporate value chain scope 3 standard. and using the representative factor that align through the UK DEFRA or the US EPA dataset, that is illustrative value. And we will also see this illustrative numbers that scale for just for the system design or for the learning process, and those emissions factors can be utilized in production selections of your region. And those emissions factors are also depends on country to country, also in which year that you are calculating, because year by year the emissions factor is also going to change, and also based on your activity that you are going to use. So activity specific emissions factors are also there, and also you are considering on that side. So reporting targets and assurance, that also covers the emissions factor very well. So you have to showcase your emissions factor in your report during your audit process, so that you can consider the end-to-end limited and the reasonable assurance. So now it's time for the question and answer, that we have finished 9 to 15, including the 1 to 15 category. So if you have any questions, then just write in the chat box. I will just try to answer all the questions. So here I can see few of the stuff through the YouTube chat. You can just write your question. So should we finally use software like OpenLCA to calculate, or use the calculation logic? Definitely you can use the calculation logic. OpenLCA is a totally different thing. That is a life cycle assessment, and unless and until if you are a product owner or product company, uh, or maybe consulting company, you can utilize your OpenLCA for your decarbonization journey or the net zero strategy to calculate the scope 3 emissions. The basic web-based dashboard or web-based analysis, or maybe Excel analysis is okay. Excel analysis is very typical. We will see so that you can understand how typical Excel analysis is. So there is a no necessary for to calculate for the scope 3 emission for OpenLCA software is required. But if you have access and if you can analyze those kind of stuff, then definitely you can utilize those LCA software as well. Then I can see that for Vartika, for insurance underwriting of insurance policy, claim handling, and insurance associated emissions come under category 10 or category 11. So, underwriting, claims handling, and core insurance services do not fall under the category 10 or category 11. It's category 15, that is financing emissions. So it depends from where you are taking the stuff. So insurance is like one kind of investment through other pension funds or other things, and then they are providing the insurance. So underwriting, claims handling, and the insurance service operations do not fall under the category 10 or 11, but it's part of the investments, that insurance policies are financial service, not the physical products. So that is why it's under the category 15. So for insurers or the insure tax, this enables economic activity, and that causes various emissions. So that can be the insure the assets, infrastructures, vehicles, buildings, any kind of assets. I hope I answer your question. So based on ISE 3000 guideline, so here I can see that ISA 3000, that is guidelines for the assurance, and you can utilize that ISAE 3000, that is UK based standards, and ISE 5000, that is also updated standards in 2025 and 2026. You can utilize during the your assurance process, as I mentioned in the last slide, for the limited and reasonable assurance. So third party or any big four company or any kind of assurance company, those who are into this assurance professions, or you can also definitely part of the assurance analysis, so that you can utilize those guidelines, that ISAE 3000 or ISAE 5000. And similarly, Australia based and New Zealand based standard is also there for the assurance, so you can utilize those kind of stuff. Please take separate sessions on category 15 PCAF and the finance emission, as it is quite different from other category. Definitely, Sandeep. It's as I mentioned, it's a very typical category, and it covers of finance emissions, and it's a huge opportunity for the good climate risk analyst, as well as the ESG professional, because who are into the accounting professionals in terms of finance, they do have the good opportunity to calculate this kind of finance emission. If you know this kind of stuff, then you will get a good job, or you will have a good products as a startup. Okay, so yeah, so there is a one questions in we'll meet. Are you going to share? Yeah, definitely. I will share the presentation and the file with you after this session, and also I'm going to share that material so that you can utilize. Before that, you can just join the group, so that I'm going to also share, because sometimes the mail is not coming into your inbox, sometimes in spam or sometimes just a bounce. So I would suggest to join that Instagram page and follow on that, or subscribe on the YouTube, so that you can get all the updates on that side. Okay, so now let's do Excel analysis to calculate the scope 3 value chain emissions, that we already seen all the stuff for each and every category, and we will see that how this category is working for each and every Excel related stuff. And let's start with Excel analysis. Let me share my screen. Just let me know in the chat box when you see my Excel screen, so that time you can just like this video as well. So it will be helpful for me and my team to generate a more content like this for the ESG sustainability and climate professional. Uh, Alex is it possible to have the PDF file of scope 1 and 2? I did not receive that. Uh, yes, Alex, I will share the material link. Just a minute. Give me 1 second. So you can, those couldn't join the scope 1 and 2 session, you can go and check the module 7. The video is available in that video descriptions, or maybe in chat. You will also find the different links. uh, so here is the link for the scope 1 and 2 material. You can just check out, and you will receive all the materials that I utilized during the scope 1 and scope 2 uh, s- analysis. So let's start with the calculations. So first is upstream purchase goods and services, category one, which is a very easy category, as well as definitely all the categories very much easy. You require emissions factor. So here I'm using the emissions factor of UK DEFRA. So here, for example, company buys office furniture that spend 100k pound, and category will be the furniture definitely, and method we are going to use is based on the spend or based on the quantity. So here you can utilize any kind of supplier name. I'm mentioning the ESG. Product or service category is furniture, because one of the company or that buying furniture, if you buy maybe 25 chairs or maybe 25 sofa, you can mention just quantity. It is not necessary because in not require any calculation. uh, then here is the spend amount, which is important if you are using the spend based methodology. So as I mentioned, uh, I'm mentioning the 100k pound. The currency will be pound, so I'm using the pound currency here. You can also mention the stuff during your so here it's emissions factors things. So it is very important to understand utilize for the emissions factor. So supplier specific emissions factors. So here lots of people on lots of companies like Tata Steel or any kind of other European steel company or any steel company, they do have their own emissions factor because they are sustainable steel or steel zero company part. So they do have the EPDs and LCA related stuff. So those suppliers are providing emissions factor. So you can utilize those emissions factor. That is optional if it is available. If not, you can go the emissions based factor, which is based on the scope 3 UK DEFRA or US EPA or any kind of other emissions factors that already published by the government entity. So those emission factors is there based on the supplier specific. It depends on the EPDs and any kind of LCA products. Emissions factors based on the kilogram CO2 equivalent per pound. So because I'm taking currency of pound, so that is why the unit will be the kilogram CO2 equivalent per pound. So it depends on unit to unit. You have to convert your unit very carefully so that you can understand better. Then product emissions factor, again, it's universally lots of campaigns, also the marine level alliances. Those alliances usually publish their product emissions factors that needs to be utilized for the particular sector. So those product emissions factor is also utilized. You have to just mention which emission factor that you have utilized for the particular emission calculation. I would suggest to go with the span based stuff for this particular category because it's very easy to calculate on that side. So here the span based calculations we already done, which is the formula of the 100k into the point 0.3. So the spend based emissions is there. This is the kilogram emissions that we get, and to convert into the tons you have to just divide it by the 1000. So this is the tons of CO2 equivalent for category 1 based on the spend based methodology. And similarly, if you have the activity based methodology, then you will require the product emissions factor. So here for example, based on the steel zero campaigning, the emissions factors will be the 0.35 for furniture related stuff. For the wooden related stuff, I'm using the product emissions factor, and the quantity is 100k. So that is also units that consider here. So quantity might be different, might be the same. So it depends on you that how you are calculating the emissions category. Similarly, you can also categorize for the supplier emissions factor. So if you have the EPDs and LCAs, those supplier has mentioned the emissions factor, then you can calculate those emissions from that supplier specific emissions factor. So here you can see the different methodology give the different tons of CO2 equivalent, and you can utilize those emissions factor based on your requirement. And these are the different emissions tons of CO2 equivalent you will get for the category 1. So category 1, it's covered for upstream. Let's move into the category 2. So capital goods, some similar structures for the category 1 here, but the tag as a capex, that how much capital expenditure that you are going to utilize. So for example, here purchase of any IT servers for any IT companies like TCS, Infosys, or Accenture has purchased any kind of IT servers or data centers. So here the spend amount, let's say uh, 250K, and the currency again is the same for the pound. So you can mention that currency. Region is the UK. Product service category is IT. Supplier quantity is optional, but it's you can mention. It might be utilized for the methodology selectors and all. So the methodology is very much similar, but here your emissions factor is based on your capex utilization. So for example, here I'm using the kilogram CO2 equivalent per pound. So the spend based emissions factor will be the 0.40 as per the DEFRA, so that my overall emission will be for category 2 is spend based related stuff, and it will be the 100k kilograms of ton. So for that we have to divide it into tons of CO2 equivalent. So that is category 2. So this is part of the capital category 2, which is considered as a capital goods. Let's move not a scope 1 and 2, but you have to utilize the scope 1 and 2 data. So for example, natural gas used in scope 1, which is a 50,000 kWh, so that you can utilize that quantity here for 50,000 kWh. You can separate that kWh. Fuel type is natural gas. So natural gas. Country grid is UK. Energy content, the emissions factor is very much important here, because we are going to use the well to tank emission factor, as I mentioned, cradle to gate or well to tank. So well to tank emissions factor is 0.025 for the emission UK DEFRA related stuff. So overall emission will be the 1250 kilogram CO2 equivalent, and to convert in tons of CO2 equivalent, you have to divide it by 1000. So you will get a 1.250 tons of CO2 equivalent category for 3. So that is part of the natural gas utilized in your particular energy use, and you have used well to tank emission factor or cradle to gate emission factor. Then let's move into the category 4. So that is mode, upstream transportations and distribution. So here the road freight from suppliers. So we have chosen the mode is road, and raw data is distance is 400 kilometers. Weight can be the 10 tons. I'm just giving the example. I will just write down here. So mode will be the road. Distance is 400 kilometers. The weight will be the in tons of 10, and the carrier emissions factors, we are utilizing the truck because we are shipping through or logistics through the road. So we are utilizing the truck emissions factor, which is 0 meter. So that is covered the truck emission factor. And you can see that kilogram CO2 equivalent tons of kilometer in UK as well. So overall emissions will be the 248 for the calculation, and for the tons of CO2 equivalent you have to divide it by 1000. So it will be the 0.248 tons of CO2 equivalent for the upstream transportation and distributions related data. So it's a very simple calculations for few of the categories, and it depends on how you are calculating on that side. For the category 5, waste generated in operations, that is landfill mixed waste. For example, we have taken the waste type that our waste is going to for the landfill, and it's a mixed waste. We are not know that whether it's a paper or plastics or hazardous waste. We are taking 5 tons of weight for 5 tons. That can be the weight. Treatment methodology, definitely it's dumping to the landfill site. So you can mention the dumping methodology. uh, l- Emission factor will be the 450 kilogram CO2 equivalent per ton. Will be the kilogram CO2 equivalent per ton. So the overall emissions will be the waste into treatment into emissions factor. So the tons of CO2 equivalent will be 2.250 tons of CO2 equivalent. So that is waste generated operation. Similarly, you can change the methodologies, treatment methodology, waste type, and your emissions factor based on UK DEFRA and other part of emissions factors that I'm going to share after this session. So you can utilize those emissions factor as well. For the category 6, so category 6 here is a business travel. So for business travel, you will require data of employee that, for example, employee flight from London to Berlin, or London to Berlin is in Germany. So raw data will be the ninth 30 kilometer, for example, and the passenger is one that has been traveled, and it's a short haul, and for short haul the emissions factor is different than the long haul. So here let's just mention that travel mode is flight, distance is 930 kilometers, then passenger count is 1. Hotel nights is important because hotel nights calculation is also going to be count. So let's say 3 nights is going to be stayed in Berlin. For the class economy or business, let's go for the economy one. Short haul or long haul. So for short haul emissions factor, we are going to short haul, and we are taking the emission short haul. uh, Hotel emission factor is also definitely it's there, and for that hotel emissions factor as per the UK DEFRA, it's 15 kilogram CO2 per emissions. So sorry, 15 kilogram CO2 equivalent for the per night if you are staying any kind of hotel. So that is average one, and 0.15 kilogram CO2 equivalent for the short voltage. For the long voltage, the emissions will be different. And similarly, the hotel nights is going to calculate. So here hotel nights will be 3 nights. So it's a 45, and total is 184.5, and that covers the overall emissions for in kilo. So that is 1000.184. So you can carry on with me as well if you want, because it's very easy to calculate some of that category, and sometimes it's very difficult if your whole value chain process is very typical. Category 7, again it's employee commuting, similar kind of stuff of business travel. Just a minute. Just oh, hmm. Yeah, employee commuting. So I'm just sharing the screen that you can see the actual amount. So for example, here the head count will be the 50, so that 50 staff that drive uh, through the car to their work location, and the average distance will be the 30 kilometers, 15 kilometers one way, and the work days in a year usually it's 220. So emissions factors for the car is 0.18, that is kilogram per kilometer. You can mention on that side. So the overall value for the modal shift will be, here is the car. So for example, you do have the total head count is 250, and out of which 50 is coming with the car. So for, let's say, example of 30%, then your calculations will be based on the mode percentage, distance, multiplications by days, and emissions factor. So here I can see the value will be. So the overall calculations is coming around this uh, situations, but it depends how it's coming up on the 50, that is multiplications by the model split, and multiplications by the total days, and multiplications by the emissions factor. So it depends on how it's coming up through the various situations for various employee commuting. If someone is coming through the public transportations, you have to calculate the public transportation's emission factors, and based on that, it helps you to understand which kind of emissions factors that you are going to utilize for that region. So here you can see that 50, here the average distance we have to count. So we also have count another situation. So the overall calculations will be the 59,400, and if you convert it into the tons, then here it's coming at to 59.4. So mode, that is car, that is percentage. You have mentioned the percentage, that is 50 per 50, not percentage that you have to mention, but you have to disclose that how much distance that they are covering in both way, from work to home and home to work. So that is 30, and the days is 220, and the emissions factor is 0.80. So it will gives you 59.4 tons of CO2 equivalent. Then category 8, that's coming for the least asset. So again, it's very typical to calculate. So for fields, you will require, for example, you have leased warehouse electricity, so that you have to calculate your energy use. So you have leased your warehouse. So for that, if you are calculating your electricity, then you require energy per year that you have consumed. So for example, you have spent or you utilize 80,000 kWh, or if you have any energy bill, you can utilize those data. And the lease type is a long-term lease. You can mention based on your lease agreement. Here you have to consider your regional grid emission factor, which is comes under the kilogram per kWh or tons of MWH. So as per the UK DEFRA, the emissions factor is 0.23, and overall it's coming under the 18,400. So uh, if you convert into the tons, it will becomes 18.4. So that is the category 8. For the category 9s, it's the same structures for category 4. You can see the formula because it's emission distance, weight, and the mode of emissions factor, because it's a downstream transportation. So it's very much easy to categorize for the category 4. Then category 10, the processing of the sold products. So the product type, customer energy input, processing assumptions. So here the for category 10, it's very easy to understand that customer use electricity to process a sold chemical. So I'm taking just one example at that. Product type is the sold chemicals, and in that energy is utilized by the 40,000 kWh, for example. And here I'm just mentioning that customer uses electricity process the sold chemicals, so that you can understand that what are the processing is happening. And the grid emissions factor is very important here. Again, it's a 0.23 I'm taking here. uh, it's process based stuff. So overall, it will be comes under the 9.2 tons of equivalent for the category 10. Then category 11 is use of sold product that often, as I mentioned in the slides as well, that largest emissions across the scope 3 and have a major impacts on that. So here the company sells 1,000 electric device. So let's mention the sold products of electronics, and it's 1,000. Then product lifetime will be the 5 years that electronics item is going to be lifetime. Power rating is zero point 0.2 kW kilowatt. Usage hours 4 hours per day. Let's say geography. Let's take India. Regional grid emission factor for India will be 0.35. So here you can see that one of the company has sell 1,000 electric device, which is maybe TV appliances or any kind of electric devices, and the product lifetime will be the 5 years. So as a agency, they have to count 5 year emissions. Power rating for one appliances is zero point 0.2 kilowatt. Usage hours, for example, end customer is going to utilize the 4 hours per day. And in India, the regional grid factors will be the 0.35. So the total energy will be comes under the 1460, which is 1460. Then you have to calculate the total energy for X number of sold products. X number of products is 1,000 here. So you have to multiply it by the total energy into the sold of products. And then you have to calculate for the lifetime energy emissions, that lifetime energy into the regional grid emissions factor. So which is comes under the 511 tons of CO2 equivalent. So here you can see that still whatever category we have count, this is the highest number we got uh, today. So that is the stuff that covers under the category 11. So here energy per unit, total energy emissions you have to calculate, and the final you will get the overall tons of CO2 equivalent. For the category 12, which is end of the life treatment. So here we are taking example of plastic packaging, which is incinerated. One of the category when we do waste treatment, that also we have taken the example of landfill. Here we are taking example of plastic packaging incinerated. So the raw data will be the plastics that utilized for the 3 tons, and the emissions factors is 2.9 tons of CO2 equivalent. So the overall calculation is very simple, 3 multiplication by 2.9. So disposal method of percentage you have to mention that, and based on that you can divide the emissions for each and every methodology and the material compositing, because the paper and plastic packaging is different, paper is different, metals is different, other iron is different. So all the material life end of life treatment you have to mention, and you have to mention the treatment emissions factor accordingly. So overall the 8.7 tons of CO2 equivalent is coming up for the category 12. Category 13, similarly, it's downstream assets, and same logic as the category 8 that we see the upstream list assets. So if you are own the assets and giving to someone else to operate your assets, then it will comes under the category 13. It's similarly logic based on the category 8. For the category 14, it's franchisees, which is very important, and franchisee revenue, energy use, floor area, that can be helpful, and you can utilize the hybrid model as well. So 5 franchisee store, for example, that utilized overall 20,000 kWh energy. Uh, Here the 200 k pound cell area, and area will be the 2500 floor area. So you can utilize the based on the floor area, based on the energy use, and based on the spend methodology. So each use is utilized. For example, each franchisee store utilized 20,000 kWh. Each then it will be the uh, 5 multiplication by 20,000 and multiplication by the grid emission factor, which is 23 in UK. So I'm taking that 23 tons of CO2 equivalent that comes under the 14 franchises. So here is also mentioned the same stuff, that is comes 23. So that covers the 14 category. Category 15, as I mentioned, the finance emissions in the slide, which is comes under the PCAF methodology as well as the other part of the assets class. And if you are mentioning the particular equity holding as a part of asset class, here the loan, the fixed income, the other real assets, other uh, things is coming up. So for example, here the ownership is only the 10%. Investee companies emissions, which means whatever investment that we have done as a mutual funds owner or as 1,000 tons of CO2 equivalent per year, then we have to mention that 5,000 tons of CO2 equivalent. So as a financial services, you have to ask your investee company or issuers or your loan takers that you have to submit your annual emissions every year, so that you can calculate as a financial service or asset manager or bank to category 15. Also the AVIC or asset under management. For example, you have 140k pound assets across your region. So the calculation is very simple. Uh, your investee emission is 5,000 and your ownership is only the 10%. So you have to calculate your ownership related uh, investee emission only. So that is comes under the 500 tons of CO2 equivalent. So this is the final stuff. So you can see the example here, which is a 500 tons of CO2 equivalent. So likewise, you have to collect the data from your investee company for calculation of your investment. So if your investment is 90%, then your emission will be much more higher. So you are categorized for the 4500 tons of CO2 equivalent for your investment, and you have to reduce the investment by providing a sustainable solutions or by providing a sustainable finance. So those categories that we already see that covers the overall stuff, and it's help you to calculate generate all the data from all the site. Yeah, so the emissions factor sources, as I mentioned during my presentation as well as during the explanations. So you can go through this all the emissions factor sources. If you cannot see the Excel sheets, you can see those sources of EEIO models, which is a span-based emissions factor. You can go the XEO base as well, so that you can utilize those stuff. And for the finance emissions, you can go for the PCAF methodology, which is very helpful. For waste and fuel related emissions factor, EPA US has also done a very good job, so that you can utilize those kind of stuff. International Energy Authority, which is energy statistic and electricity emissions factors, that also giving a good emissions factors, and EFRA UK government for annual convergence factor for GHG reporting. So that also you can download. I will also share after this whole session. And the final total, definitely it comes based on the different category. So you can see for the each and every category, it's coming for the various types of stuff. And for the category 11, it's highest one. As I mentioned, overall globally is also very much important to understand. So overall total is very typical for the category 11, and we see each and every category very well, and it is very typical calculation to understand your raw data, to understand the formula, and to remember all the formula. So the final conclusion is the category 11, which is a use of sold products, and category 15, investment, typically dominate the overall scenario for our example. Spend based category, which is a category 1 and 2, that carries a highest uncertainty because the data, raw data, is not available. Sometimes you have to go for the spend based methodology. Third is supplier specific data that can be the drastically improves accuracy. So that helps you to understand your improvements year by year. Then last, that production that require dashboard must. So each and every category that require store row line items, preserve emissions factor version, propagate uncertainties, because the emissions factors are different for different emissions categories from the various sources. So it is very difficult to maintain the data in the Excel sheets, and very haphazard manner that you have to calculate. So for the employee commuting as well, you have to also add all the data of employees, and then also you can calculate those employee category. And similarly for the capital goods are also frequently changing and underestimated for the capital goods as well. So this is very important stuff to understand why it is very useful for utilize the various types of other tool, and it important to understand each and every scope 3 category. I'm just back to the presentation slide. So for that I built web-based dashboards to make your life much easier. So to give a basic example and to understand and to give all the formula in one dashboards, you can utilize that dashboards as well, and helpful for your professional or any kind of thesis work. You can utilize that dashboards as well. So to make your life much easier, dashboards that helps you to calculate the scope 3 emissions. So I'm going to show you so that you can utilize that dashboard in your professional life if you are calculating the scope 3 emissions. Similar dashboard that helps you to understand better that how it's work for you. So till now, if you have any question, just write in the chat box. I'm going to web-based dashboards so that you can see the how the easy calculations you can utilize. So here is the scope 3 value chain emission dashboard. So here what this emission dashboard is giving you, as I also want to share that I built specifically, you can access, I will share the link as well. So let me quickly share that what types of things is available for this web-based dashboard. So you can utilize any, currently it's EP and DEFRA. It's updated version. So updated monthly by adding the various emissions factor. So you, if you are getting access of this dashboards, you will get all the emissions factor sources whenever it's updated. So if we are using UK Department of for Environment, Food, Rural Affairs with DEFRA for the GHG conversion factors, we can utilize the supplier specific activity based, average data spend based, and proxy estimate related methodology, which is back-end calculations will be happen. So you can calculate based on the for example activity based data. So if you have the activity for the capital goods, you can just mention the uh, data here, and the emissions factors based on your requirement, you can mention the emission data here. And this is the uncertainty for the emissions factors. Emissions factors data, we have good uh, certainty, so we are not taking any kind of uncertainty example here. Data coverage is good, so we are taking things. So here you can see the overall total scope 3 emissions is coming up, total scope 3 average data quality scores, and overall capital goods. So you can add other categories as well, and you can mention various types of data based on the various types of methodology, and you can do all the stuff, and you can get all the items, and you can also download as a png, or you can also do a full screen as well. For the data quality category wise is also there: capital goods, fuel, energies. You can add all the 15 categories together, and then you can download the csv report for your own manufacturing process or for your own analysis. So you can also get all the templates ready, so that you can send to your data requirements or data points or contact points, so that they can send the data based on your requirement. So this is very much easy to do and easy to understand. So if you are interested to utilize this web-based dashboards, I'm just sharing the link. You can go and check this dashboard. So I'm sharing in the chat box. Again, this enterprise ready web based scope 3 emission dashboards that built for the GHG protocol corporate value chain standards, that designed to help organizations accurately measures, manage, and lots of companies are in module 7. And I also shared for the scope 1 and 2 emissions web based dashboards. And for this particular modules, I'm sharing this whole scope 3 separate dashboard, because I have not covered under the scope 1 and 2 in detail, because the emissions factors are a little bit different than the scope 1 and 2. Scope 1 and 2 modules web-based dashboard is also there. I will share the link again. So you don't need to advance your spreadsheets or formulas. The logic is already built in this web-based dashboard. So currently, I already shared to the organizations who are doing the emission analysis at corporate level in London and other parts of regions in US and Europe. So, and a few of the university in Warwick and other university are using for the purely learning and practice base. So many companies typically pay around me for the 170 pound for similar calculators and templates. But for every month that attending this webinar, I am offering access at uh, 20 pound, but the special price for this webinar session, including the 50% for the 10 pound for today. So I just to help you to get start for the scope 3 based on the GHG protocol emissions and the scope 3 emissions, so that your life is much easier for the ESG and climate reporting. So if you are interested, just click on the link that I have sent you in the chat box. And if you are interested to get access on the other dashboard, just let me know. I will share those. So lots of corporate companies and other universities are using, individuals are using. It's a very easy to use, because it's a very easy to understand. So instead of struggling with manual formulas, you can focus on analysis and then reporting and then strategy. So if you would like to simplify your scope 3 calculations, feel free to use this tool. Just click on the link and you can access that tool for that as well. And for the scope 1 and 2, I am going to also share the link. So if you want that scope 1 to web-based dashboard link to calculate the whole GHG emission calculations, then you can join for the corporate level. But because of the special price for this webinars and you have joined, I'm just sharing that whole special price. You can just go and just you will have the 50% off on those things. So it's just on part 10 per 10 pounds, so you can utilize those web-based scope 3 valuation emission. So before we wrap up today, I also want to briefly share different stuff that might helpful for your career life in climate risk analysis. So if you want part of the foundational part, and that covers overall who perfects the fundamental of climate risk, risk assessment and management with 8 comprehensive modules. So that designed to help to build a strong climate risk foundation. Second is climate career accelerator bundle. So this is one for professional career changes that covers everything, that foundational bundle plus climate career pathway with 13 modules in total. So helping you to move from learning into the various applications and the career path. And the third that covers overall advanced, you will get all the full courses from foundations, mid accelerators and other advanced level ISSB and TCFD reporting for the climate risk analysis, because nowadays climate risk analysis give a good amount of money in the market for the risk analysis as well as the finance analysis as well as for the physical risk analysis. So with 17 modules overall, you will have end-to-end climate risk expertise from fundamentals to advanced disclosures. And as I mentioned, this is a very high growth career. So mandatory for the climate disclosures, financial institutions, corporate who must assess the physical risk and the transition risk. Investors demands very much for the transition plans. So that helps you to create the adaptation finance that help you to create a various dashboards. And unlike many ESG rules, climate risk is very much technical, quantitative, and decision critical, so that you can do a automate and more valuable for your field. So think of it as future equivalent for those kind of financial risk management, so that climate scenario analysis, physical transition risk modeling is covering all the course that are showing here. So that is covers under the various modules. If you are taking a different kind of module, then it will taking different paths. So if you want to access all the modules in one access, so you will have a different 47 participant already joined, and other participants are also going to join today through the various community initiatives that we do have in UK. So if you are interested, you can join this climate risk assessment related module. This series is separate from the end-to-end ESG reporting, so you can join those kind of module if you want to. I will also share the detailed curriculum and course structure. So the price is for the whole pathway to impact is for the foundation bundle is £45, for the career accelerator is for the 64, and all access masterclass 85. And for the today's webinar, I'm going to give for the 15% for all the exclusive course for by adding the climate 15 code. So you can just use this code as a climate 15 whenever you are doing a checkout. You can just click on this link. You will guiding through this whole access climate risk masterclass, and you will have, if you are taking a last one which is cover all the 4 courses, which is covers all the part and discount. So likewise, you can just click pay for that things, and it's very much easy to do, and it's very much demanded climate risk assessment. And you can see that detailed structures that I have developed, and from introduction climate change, what is climate science, how it's climate work, understanding of transition risk, physical risk, how analysis and the applications for the financial. We are also going to see the climate value at risk, which is a CVAR matrix, which is very important for each and every financial institutions. We will see the all the PECTA assessment tools and other sources, and that covers all the stuffs under this particular module. So it depends what you want to take. So I'm just sharing these 3 links, so you can click on your site, and you can also find the same link in my document profile as well as So you can just click on the link. I will highly recommend it for the all access climate risk masterclass. And if you are interested for the dashboard, I will suggest to I'm just pin that message so that you can utilize that dashboard link for the scope 3 calculation, which is very useful for your analysis for the scope 3 emission, and it helps in your professional life. So you can just click the dashboard link, and you will have that access of the link, and whatever update is going to be happen in every month, you will get all the updates in your web-based dashboard. So it's a very easy to access, and it's just on the 10 pound uh, access to dashboard. So it is very cheaper rather than the other parts of tools that are already in the market. So yeah, so here we are going to end, and if you have any question, just type in the chat box. I will try to answer on that side. Can you please share the Excel sheet where you were calculating all the scope 3 category? Yeah, Vartika, I'm going to share after this mail. My team will share with you, and make sure that you have registered. If not, just join the Instagram group. I'm going to share that as well. So those who are interested for the All Access Climate Risk Masterclass, you can just join. Today's we are giving a 50% discount on that side. Those who are interested for the web-based dashboard for the Scope 3, you can utilize for the category 15. Finish the session on the Scope 15. Scope 15, Scope 3, Category 15 will use it. Please give tentative. So currently, I'm not sure because we are doing a module end-to-end series as well as climate risk assessment. But very soon, I'm going to arrange that Scope 3, Category 15. So you will get the update on that side. So yeah, so if you are interested for the Scope 3 dashboard, you can just click on the pin message, and you can have the for the scope 3 value chain emissions or web-based dashboards or the climate risk assessment or anything, just type in the chat box, and you can use this. So if don't have any other question, then we will wrap up today's sessions of scope 3. We will see the module 9, which is a double materiality process assessment. I am sharing the double uh, access, and you have to register in the last link that I have shared. And based on that, we will have the double materiality process uh, module 9 on 24th Feb. Okay. Thank you very much, all of you, and see you soon. Bye.